Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to share 4 of my tips for investing in a stock market correction. I'm certainly not Warren Buffett, but if you want to see how I'm attacking the market during this recession period, then this is the video for you. And hey, just a reminder, if you enjoy stock market analysis, personal finance videos, and investing ideas, then make sure you subscribe to the 40 Finance channel. All right, simple tip number 1 to give you the flexibility to take advantage of any possible situation, and that is always have cash available. With this most recent stock market correction, we were coming off of a time where stocks have been running higher for several years, and there are some dips in there. But I'll tell you, somewhere, around November, December, it was getting a lot harder to find stocks on sale, so to speak, from a valuation perspective. So I was trying to hold on to some cash and wait and see, what's going to happen with this. And even heading into January, it looked like this was just going to be another monster year, but there was nothing really intriguing for me to buy because the prices were just going up. I try to buy when things are down. So it was an interesting game, and it reminds us to always have cash available because you never know when the prices are going to drop like they recently did. And you also need cash to help you sustain your investments, right? You can't put every dollar to your name in the stock market because eventually you're going to need a car repair or want to buy a house or a wedding ring or something, and you're not going to be able to play the long game if you have to sell all your stocks to satisfy some of those other needs you have. So having cash available on both sides of the investment is very important in my opinion. All right, next up is knowing your goals and your timeline. So for me, it's pretty simple. I'm building a long-term portfolio to help my money grow. I don't try to win plus 1,000% stocks. I try to go with companies I trust, and I try to make good foundational decisions. And my timeline probably doesn't hit until my kids get closer to college and then maybe around retirement. But in the first little bit here, my goal is just in, right? I'm just putting money in. I'm not interested in selling. So my timeline is long. But other people might come into the stock market and say, my goal is to plus 40% my money, this year, or else I'm out. And that's a much harder proposition, right? Or even in 2 or 3 years, I want to turn $10,000 into $30,000. That's hard. I'm telling you that right now. That's not easy. And when you know your personal goals and your timeline to be in or out of the market, it helps you think during these wild and wacky days when stuff's going down. I didn't even really blink. I mean, I was interested that stocks went down. I was kind of excited because we haven't seen the prices dip in so long, but I wasn't nervous. I didn't think that things were going to go out of business. I was just like, well, this could be the opportunity. And sure enough, it looks like it is an opportunity. And I'm only going to get so many more of these going forward, right? So with goals, make sure you know, what am I investing in? Am I going to do individual stocks, ETFs, REITs, bonds, whatever it is? Identify what you're going to do. Identify your risk tolerance. What is your expectation for growth? If you're going to say plus 40 or plus 50, well, you have to understand that that's a higher risk tolerance than probably the appropriate upside. So as long as you understand them, that's fine. And then finally, understand when you need the money, right? If you're going to the stock market because you're trying to get a new car or a new house, that might be, just 2 or 3 years. I'm not sure if you're going to be able to achieve that depending on how much you're putting in. But either way, you need to understand what that timeline is so that you can make the best decisions. All right, number 3, I think, is one of the most important tips I can provide during a recession pullback like we're having right now, and that is build a strong foundation first. The thing that concerns me is that when you're watching, oh, this stock's down 60%, like what a time to buy. Yeah, it looks like that because the price came down. But don't forget how high some of these prices have been, right? So what is a deal only if you measure the downside isn't necessarily a deal at all. fall. So my advice is to keep at least 50% of your portfolio in premium companies, ideally companies that have a lot of cash on hand, potentially pay a dividend, or you can start to get into ETFs or index funds and spread your risk, things that are going to go up much slower, but will still go up from recession type lows. That's where 50% of your long-term money needs to be, probably at bare minimum. And then trying to avoid the shiny objects for all the speculation plays, give yourself a budget on those, right? Say, hey, you know what? I got 100 grand in the market. I got 50% in index funds, 25% in dividend stocks, and then 25% I'm just going to go out and speculate with, just say, companies like Uber or Roku or things like that that have high growth upsides, but they're not necessarily built today to last forever. All right, the last recession tip is pretty simple, and that is buy in stages. Most of you have probably heard this before. No one knows when the bottom is. I'm sitting here on March 14th or so. I don't think we're at the bottom. How much further we have to go depends on how long this news lingers. Like, I'm not even putting a cap and saying we got another 10% to go. I'm saying, like, the longer the news lingers, the less people are making money, and so it could go on for longer. That's why I'm buying in stages. Every time I have some money coming in, take a portion, put it off to savings, take a portion, invest it in my target stocks, my strong foundation stocks, okay? And that's how I'm investing. Make sure I'm buying on a red day when the stock is down. Should have plenty of those here in the next month or so, red days that is. So don't buy on a green day. Like this past Friday, there was a press conference and stock shot up. I mean, it was the stupidest thing I've ever seen. And what we'll probably see this week is whatever that recovery was will come down even more unless there's just a continuous flow of good news. I don't feel there will be here on March 14th. And when you're buying in stages, and let's just say you have 5 or 6 stocks and you're buying in stages, right? And you're like, oh man, I don't have enough money to buy everything. Which one should I do? Use your cost basis as a guide, right? Like, take a look, like, which ones are under your current cost basis, which ones are over. Go for the ones, as long as it makes sense fundamentally, go for the ones where your cost basis is riding higher than the stock price. Okay, because that's where you're going to get that long-term win. Your cost basis in your brokerage account can really help you make some decisions of where to put money in your portfolio, because it's the simple game of, I bought this one day, right, and now it costs less. Do I still believe in the company? Is it a good company? Is it, you know, got 3 to 5 years of profits after this storm passes? If yes, then buy. You don't need to look outside of your portfolio necessarily to find things to buy. Stick with the ones you know, buy in stages, buy on the way down, right? Look for the bottom. There's going to be some pop-ups here and there. Don't buy on the first day that it pops up, but maybe buy a couple more on the way up, and then hold back and wait for the profits to materialize. So those are my 4 tips for investing during a recession. Pretty simple stuff. Hope you guys enjoyed this and got some value out of it. Please give me a like and subscribe if you enjoyed this video and you're looking forward to more stock market analysis. We'll see you on the next video.